Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have Jamie Englebert. She's the president and CCO of Englebert Financial Advisers, as well as Chris Englebert. He's the chief investment officer and founding partner, also with Englebert Financial Advisers. We're going to take a look at challenges women face owning registered investment advisor firms, and of course we'll run through the charts with Chris. Jamie, it's great to have you back with us, and let's go through our first slide here and run through some of some of the challenges and what it takes for a woman to run an RIA.
Yeah, so thanks for having us today. I would say the last 2 years there's been a major shift towards female empowerment, especially in the finance industry. And I feel like when somebody goes looking for an advisor to work with, they're doing their homework online, looking for somebody, they're more socially responsible, they're looking for diversity, and more open to selecting a female-owned company.
Yeah, it's really interesting to see how it has shifted so dramatically, even in just the past 2 to 5 years, as you had mentioned. Let's run through our next slide and tell us what you have there.
So there's definitely a difference between rapport talk and report talk. And I feel like women are really good at rapport talk. We're a little more empathetic when we're meeting with clients. They feel a little bit more comfortable and at ease. And I have to say the bonus of working with my husband is that the client gets that combination of styles, and it definitely makes them feel a little more connected.
Yeah, well, it's really interesting. I know this is totally off script here, but what's it like working? You know, you're together at home, you're together at work. Does that make you closer, or do you help each other resolve challenges, or piggyback off of each other?
Yeah, absolutely. I mean, we work together on everything. It's just good to bounce ideas off of each other. Like you said, when there's challenges, we can just work them out, talk them out, and yeah, we definitely separate the work life from the home life.
Right, and we do have time where we're like, we're not going to talk about this right now. Let's talk about it tomorrow morning at work, that type of thing. So you do have to get that line of demarcation because you're with each other all the time. But also what's extremely important and what's good is the fact that we have been working together for so long. We know what each other's thinking. We know, there's complete trust because I know that I don't have to worry about following up on something because Jamie will follow up and vice versa.
All right, and she's the boss too, so
That's
you better
right.
make sure you're following up, that's for sure. All right, Chris, let's do our monthly review here. We're going to run through the S&P 500, and it's such a different picture from last year.
Yeah, totally different, 180-degree opposite, all-time highs. We had trade talk news. The president signed it the other day. If you see that the chart from the chart that the S&P 500 in October really took off and we've almost had a parabolic rise, it would not be unusual to see some kind of profit taking. But what we think really is going to happen is that investors are waiting until the new year. So for example, in our shop, we've already done all of our tax loss selling for the year. So we really don't want to make any major changes in positions at this time. But again, many people keep doubting the all-time highs, and if you watch some of the hedge fund news, many of the major hedge funds this year did not do well because they're not positioned bullishly enough.
All right, moving along to the Nasdaq 100, the tech-heavy index, and despite all of the tariff talk that we've heard over the past 18 months, it continues to outperform.
Yeah, if you remember a couple of months ago, we talked about this. The death of growth was almost premature. Everybody was saying, hey, is it time to roll over into value? But really what's been happening is people are coming back into the growth stocks, coming back with them in a vengeance. Now, one of the longer term plays that we think is happening out there is people are underestimating the life cycle of the chipsets for the 5G upgrade. This isn't going to be a 1 year or 2 year or 3 year. This is going to be a 5 to 10 year upgrade cycle, and a lot of the Nasdaq chip companies are positioned to take advantage of it.
All right, Russell 2000 finally getting some participation.
Yeah, it is, but we included a longer term chart on this to show you that it still hasn't made new all-time highs. This is still a large cap rally. It's driven by large cap growth right now. You and I talked about this before, that if the mid cap and small cap stocks ever really took off, you could really see some good gains and some good money to be made. Maybe that's the story for 2020, but it's not for 2019.
All right, moving along to crude oil. It just can't break through any significant levels, but for good reason. The supply and demand picture just isn't that good.
Yeah, but we also call it kind of a stealth rally because if you look at the crude, you overlay a chart with the S&P 500, you can see that since October, crude has been quietly going higher. Today, it's obviously made some highs too. It hasn't broken out, but again, back in the summer, one of the calls that we made was that we thought in the next 6 to 9 months you could see $70+ a barrel oil. Still sticking with that. We think that in 2020 that could be the story, that you get higher energy prices as the global economy really begins to recover.
And can you imagine if we finally get energy participation, what that could do to the overall market?
Yeah, no question about it. The energy stocks have been laggards for literally over the last 3.5 years. They all pay good dividends, they're all value oriented, but they're extremely under-owned and they've not participated at all.
All right, let's wrap it up here with the 10-year Treasury.
Yeah, we think also this is another story for 2020 because this chart shows you, again, another stealth rally. Yields are quietly going up. And we think that in 2020, when the narrative changes that we are not going into a recession and the U.S. economy is still in a growth phase, that you could walk in much like 2016 and within 6 to 9 months see at least 100 basis points higher. We don't think a lot of conservative investors are positioned for that because what ended up happening was that in 2018, they saw losses in their bond portfolio. Now here for 2019, they're doing really well. We think that conservative investors have to be much more on high alert than obviously equity-oriented investors.
Certainly a different picture from last year with the Fed especially being so accommodative now.
Yeah, no doubt about it. I mean, last year at this time, we were extremely defensive. The month of December was literally one of the worst months in the stock market ever. Here we have all-time highs. Santa Claus has come to town.
Yeah, I mean, it was great if you picked up some shares in your 401k in December, though. I mean, look at the run that the market has had.
Yeah, correct. You're correct.
All right, Chris, Jamie, thanks so much as always for joining us. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.